Dzień dobry, witam was, nazywam się Mateusz Oh shit. Sorry, wrong class. Hi, my name is Matthew Mihalik. My stock is TripAdvisor, and today we're going to be going over some general information about TripAdvisor so you, as a shareholder, can make a clear decision on what to do with this stock. I'm going to be going over mergers, the annual report, a couple other things, financials, and giving you enough information so that by the time you walk out of this class, you know what you're going to do with TripAdvisor. So let's travel into the first slide. I love puns. So you might be sitting there and wondering who that handsome, scrumptious looking fencing player is. Well, it's not Ken Betts, it is Stephen Kaufer, the CEO of TripAdvisor, and he has been since February of 2000 for over 19 years. He created the company with a couple other gentlemen sitting at a table, in a room, in a building, in a warehouse, in a building, in a room, making the final decision on what TripAdvisor was going to be. So essentially, TripAdvisor was created to be a database full of basic information about traveling. So essentially, it was going to be a white label search engine for sites like Expedia and Travelocity, of which they are competitors with today. So why did everything change? What is the TripAdvisor we know today? TripAdvisor changed all after 9/11. After 9/11 kind of decimated the market for kind of the hotel travel industry. Stephen Kaufer kind of saw this decision to let's change the company, and they weren't making any revenue or profit whatsoever before. So he said, why not let's just change who we are? So he rebranded himself and he made TripAdvisor more of a review-based website. And after I think the first 6 months of letting users review and leave reviews on websites, they had already broke even the amount they originally invested in the company, which means that it was working. So they stuck with that plan, tweaked it a little bit, and they are TripAdvisor that we know and love today. So the next thing I want to explain is, how does TripAdvisor as a website make their money, you might be wondering. So 70% of their income comes from something called a cost per click. So essentially, whenever you are typing on your laptop and you want to book let's just say Professor Betts is booking the entire class a trip to Disney, which he'll explain to you after this presentation is over. He can use TripAdvisor, find some hotels in the area, put whatever accommodations and specifications that he has, and he can click a link to the hotel, such as Hilton. And as soon as he clicks that link, TripAdvisor charges a small fee to that hotel specifically for the customers, and that's how they make their money, at least 70% of it. The other 20% comes from subscriptions and advertisements. So let's just say Archer Hotel right across the street from us here at Fairleigh Dickinson University. You can put on an advertisement on TripAdvisor to have funnel more traffic towards their hotel. That's another 20%. And then the following around 9 to 10% comes from display ads. So that's cat food, laundry detergent, whatever you people are into nowadays that the ads come up on TripAdvisor. The last thing I wanted to briefly mention was that TripAdvisor and the entire industry as a whole is starting to change, but very slowly. In 2018, TripAdvisor incorporated food ordering and delivery service, and the reason I wanted to include that, and I'll touch upon it later, is because the entire hotel travel industry that TripAdvisor is leading right now is beginning to change and branch out into non-segmented hotels. So what that means is anything outside of the hotel kind of category, TripAdvisor, Expedia, other companies are starting to branch into to just expand and diversify and really grow their portfolio as a company. So the next thing I wanted to talk about was the annual report, this 228-page document you can find from 2017 on TripAdvisor's website, and it goes over extensively all the strengths, weaknesses, flaws, ups and downs the company has had, and things they think in the future will change, be better, and so forth. So beginning with that, let's talk about the strengths of 2017. They launched a streamlined hotel shopping experience. What that means is whenever you are done using the website, prompt 2 will show up. You can leave feedback, you can leave customizations, whatever you think the website can improve on, and all it does is help them with a more user-friendly model. The reason that's important is because it just allows a more convenient and a more easy access use website, sets them apart, different from other companies. The next thing is they really want to focus on mobile development cycle. So producing a mobile or a more efficient, cleaner, faster, and better kind of monetizing experience on a device. Nowadays, everything is on the go, shopping's on the go, traveling is on the go. There's very little kind of planning ahead, and what TripAdvisor wanted to do was really make it more efficient and easy for people who are booking things last minute to have a very sharp, clean, precise, easygoing experience on the mobile. The second thing I wanted to talk about were the weaknesses that 2017 kind of came about. So overall, in 2017, the financial results improved, but they only grew by 1%. Hotel segment financials only grew in 1%. So even though they are growing, it was a lot less than the projected growth of 2017. There was a significant decline in the hotel segment adjusted EBITDA, which means the earnings before interest, taxes, depreciation, and amortization. And there was also a decline in the public equity market valuation. So what this means is that a lot of people are starting to look at TripAdvisor and see that they really aren't growing to where they should be. They're slowing down their growth, and that is a problem. The next thing is opportunities. 3 key areas I wanted to group together were improve the product experience, like I just mentioned, the shopping experience, allow a user-friendly, a better model, grow the brand advertising. So that's, taking or allocating online funds and taking them into offshore or offline accounts and really making it easier and really kind of emphasizing the commercials and the marketing and the rebranding and making TripAdvisor a really well-known big company, and pushing them apart from Expedia and competitors that we always see today. And the last thing is further optimize the marketing and investing. Stephen Kaufer, the fencer, wants more shareholders. He really wants to improve his market cap, and he wants to kind of catch up to where Expedia is. Even though it probably isn't going to happen, he's optimistic about it, which means that he has faith in the company, which is good. Leading on to the last thing of threats, the threats were kind of concerning to me, and they also kind of attach into the weaknesses. The headwinds created by competition, there's more growth in the hotel travel industry, and it's really pressuring the financials of TripAdvisor. That cost per click model I mentioned before, CPC, is really being pressured also by hotels, because hotels are getting upset that they're being charged too much of a fee for customers brought in by websites such as TripAdvisor, Trivago, Expedia. All those websites, in the first place, their financials are being pushed and threatened because the websites are trying to really decrease the fees that these websites, again, TripAdvisor, are giving them. So there is a significant decline in, again, the hotel segment in this cost per click model, and also the non-hotel segment. And the last thing, the numbers. I wanted to focus on the numbers because even though that 1% growth is a lot lesser of a growth that people kind of saw in the upcoming 2017 year for them, non-segment hotel revenue growth grew by 24%. What this means is anything outside of lodging or booking a hotel on their website, anything that is non-segment, so restaurants could be included in this category, which is where a lot of their money comes from, grew by 24%. That is awesome. That means that even though that 1% really didn't help or didn't make us as shareholders happy, that 24% means that they're trying to diversify and trying to work into different categories. Another thing that's kind of alarming, though, is that everyone in the same industry is doing this. Expedia is doing this. All of the people Expedia owns are doing this. They're really working on mobile, they're working on restaurant businesses, and they're really working on international. So it's going to be interesting to see how in 2019, 20, and 21 this plays out. Now, onto a couple current articles that I thought were really important. The first being TripAdvisor misses expectations as hotel revenue falls, posted in the Wall Street Journal. The reason why this article really caught my eye was because, like I mentioned before, the expected revenues are starting to go down for the hotel segment. So in 2016, 2017, that whole 2017 year, they actually grew still by 1%. But now, going into 2018, they dropped 7.9%, rounded up 8% they dropped in the hotel segment, which is alarming, which means that even though they're diversifying in restaurants and diversifying in non-kind of hotel segment, where is that 8% still going? We don't know as a buyer. The second article, I Hate My Room. I love this article because it really shows that TripAdvisor is doing something right in the user kind of model. This article talks about one of the desk employees at Roger Smith Hotel in New York had jumped roughly 100 places in New York City hotel rankings after using TripAdvisor's the newer shopping experience. So after people had gone and shopped and used their hotel in New York, they could refix rooms and listen to the reviews and listen to the problems and complaints, and they jumped 100 places in just under a year, which means that TripAdvisor's new shopping experience is really doing something good. The last article posted in the New York Times was talking about a woman by the name of Christy Love who reported a rape by a security guard at a Mexican resort. The problem with this is not that she booked this through TripAdvisor. It's because after this happened, after she went to court, she started posting on TripAdvisor really negative things about this hotel, and she has the right to. The problem being, TripAdvisor started taking down all of her reports on the hotel and actually promoting the business of the hotel because they felt it was a very unfair advantage. This was scrutinized by so many different big players in the hotel industry, and TripAdvisor didn't know how to react to it. Around the same time, it dropped the stock about 7.5% lower in the after hours of trading, again after this article was released. So TripAdvisor really felt backlash from this whole situation. A couple mergers I also want to talk about that are really important for the, again, longevity of TripAdvisor are the four that I listed here. The first being Expedia, which I talked about. Back in 2004, Expedia, knowing TripAdvisor only had $4 million in revenues, gave them $210 million in cash to buy them over, knowing something was really important. The next biggest actually happened more recently in 2015, and Best Tables, which is based in Portugal and Brazil, and then Dimi, which is an Australian company, TripAdvisor had bought over and acquired a network of over 2,500 restaurants. This all has to relate to the non-hotel segment that I keep talking about, everything outside of that core 80% revenue, because TripAdvisor is really starting to push in different segments because they don't want to just stick to the typical hotel. They want to be different. This also ties into the third of them acquiring the UK's largest independent vacation rental website because they, again, want to go global. They want to be international. They want to stick their hands into waters they're unfamiliar with to increase their revenue, to increase their name, to increase their brand image. This is all for them trying to be bigger and better than every other hotel travel kind of company in that industry. The last being TripAdvisor acquired of Coverts, a Dutch restaurant review. This all ties into the whole international, and this all ties into the whole diversifying their portfolio, not being just a hotel segmented, but really stretching into different markets. So the last thing I wanted to cover was this crazy set of lines, the general stock price and information about TripAdvisor, and the more recent times of how they've been performing. That includes 2019, 2018. Of the revenue for the business dropped about 2%. Again, that's going into 2019. And there was a 20% plunge in the non-hotel segment revenue. That means the restaurants, the Dimi, the Best Tables, the companies that they bought in Australia and Portugal, Brazil, those companies really aren't, those websites really aren't performing as well as TripAdvisor has needed them to, as there's a 20% decrease in the non-hotel segment. Going into the core hotel segment, which makes up around 80% of the revenue, that also dropped 3% going into 2019. So as you can see, there is a steady decrease. In 2017, they only grew 1% in the core hotel, and they are losing all of their non-hotel segments. So it is alarming of why everything in TripAdvisor is steadily, but in a very minuscule way, kind of decreasing. Also, that reflects the beta of now the beta for the TripAdvisor is 1.29, which is above the 0.94 of Expedia, kind of hinting that is a more risky stock. I am a risk-averted investor, so this is very alarming to me because there is no clear-cut path that TripAdvisor is kind of telling its shareholders to say, invest in us, it is the right choice. That's also this trend line. This general trend line is all resistance kind of going down. And the reason I want to mention this is just specifically because this industry as a whole is not performing as it should, and it is hitting a plateau. So I am giving TripAdvisor the big fat old X, zilch zero. I am not investing, and I'm taking my shares out if they're already in the company. And the reason being is because I'm risk averted. I don't think TripAdvisor has shown me enough that in the near future they are going to, promise some new innovating technology or set themselves apart from the industry. I actually think this industry as a whole is really quiet and has hit a plateau, and no one is doing anything different from one another. Everyone is going international, everyone is trying to tap into different markets, but no one is really pushing away from everyone else in the group. And being a risk-averted person, there's no reason for me to be in this stock because it's going to continue to go down. They've shown promising results back in 2015, 2016, really expanding, but more recent 2018 and 19, they're slowly starting to go down, and their entire company, Wholesome, is going down. And that's something that I don't like. And I don't think that they're doing enough to really push ahead in the future. Therefore, they're getting the X.